Okay, good morning to all our esteemed investors, and we'd like to thank you for taking out the time to join us this morning. Welcome to our executive breakfast session. Very quickly to begin with, we'll look at what transpired at the fixed income market, and subsequently we'll take a look at what happened at the equities market and what our recommendations for the week is. To begin with, looking at the money market and the treasury bills market, we can see that what we've always emphasized, I think, if for those who have joined this call, who have been regular joiners to this call, they can testify to the fact that we've consistently maintained that rates in the fixed income market is on a downward slope, and as such, our encouragement has been that people should position as early as possible. And so, at the money market space, we saw the open repo rate and the overnight rates are declining by 583 basis points and 575 basis points respectively, and to close the week at 26.5 and 26.92 respectively. And that was all thanks to liquidity levels in the system. We saw liquidity closing short at almost 700 billion. That was close to liquidity because we saw fact inflow came into the system, which suppressed liquidity in the market. Such we saw that significant improvement from 32 levels to 26 levels. And looking at the treasury bills market, okay, in the next slide, we'll take a look at the trend of the swap rate and the treasury bills primary market auction for the past 1.5 years to buttress the point we've always emphasized on that the rates are on a downward trend. And at the end of this presentation, we will do a roll call or an action call to all of our clients on what they should be doing. But looking at the treasury bills secondary market, we saw it closing on the bullish note, and that was due to the auction results. In the last auction, we had seen rates also significantly drop, and that filtered into the secondary market as we saw people who had lost out at their bids at the primary market come into the secondary market to fill some of their lost bids. And at that, we saw our average yields declining by an average of 12 basis points to close at 17.7%. But taking a clip from the last, probably taking a look at the last primary market auction, 290 billion worth of Nigerian treasury bills was offered. We saw total subscription of 675 billion. And at the end of the auction, 290 billion was also allotted across the three tenors, the 91-day, 182-day, and 364-day tenors respectively. At the 91-day, we saw a 74 basis point decline in the stop rates from 15.74 to 15%. And at the 182-day, we saw a 70 basis point decline from 16.2 to 15.5. And the 364-day bill, we saw a 42 basis point decline from 16.3 to 15.88. One thing we should note here is that we'll see that across the three tenors, both the 91-day, the 182-day, and the 364-day, the stop rates are now on the same 15% band. As you see on the 91-day, 15%, on the 182-day, 15.5%, on the 364-day, we saw the rate close at 15.88. The next slide speaks to the trend in the discounts in the discount rates. Beginning from January, we can see that upward trend where rates were roughly around 8%, 9%, 10%. We've shown this trend before sometimes last year. I think that should be towards the end of last year, when we were emphasizing on the fact that rates are on a downward trend, and we've encouraged investors to position early. For those who are listening, or for those who did not procrastinate, because I know last week I was speaking with the client, he had said that the reason he had not invested was he was hoping that our rates would get better. To reemphasize, and this which was also what informed this slide, that the rates are now on a downward trend. Even if you look across both the savings bond, look at the treasury bills markets, you look at the regular FGM bonds, and you would see that rates they've all signaled a downward trend, and that was why we had to bring in this chart just to show us the movement of rate. We can see in November 2023, that was when rates peaked at 23.5% discount rates. We saw yield as high as 31% then. But if we look at where we are currently vis-a-vis that period of 23.5, we can see that that's a significant drop of almost about 10 basis points, sorry, 1,000 basis points. That's about 10% drop from then to now. So one thing we've always emphasized, it is not too late to invest. For those who are positioned then, fine, you've listened to our call, and I'm sure that you are currently enjoying the benefit of that. For those who possibly, due to one reason or the other, could not position, then it is never too late, because the fact remains that the rates will not go up. We don't see that happening in the next couple of months. So why continue to hold on to cash when you can also lock in these funds to earn significant return? Because with where rates are at 15%, they are still quite attractive, and that's where it has to be compared to where we were coming from the levels of the 8, 9, 10%. So we will still maintain that call to let our clients know that the rates in the market currently are still very attractive, and we should not lose the advantage of investing at these levels. And looking at the bonds market as well, we saw similar sentiment or similar pattern in the bonds market. Bonds market also closed bullish, with investors continuing to position at attractive yield. We saw a significant interest, particularly at the short end of the curve, and that's because we've seen investors are now beginning to look at what's happening in the treasury bill space and what's also happening in the bonds market. People will look, okay, if I can get a 15, 16% at the short dated bonds, I would rather buy that instead of buying the local treasury, so the short-term treasury bills. So we've seen both markets been impacting each other lately, and as such, we saw significant buying interest as well at the bonds market. And if you look at on stock basis at the short end of the curve, we saw a 34 basis point decline, and at the mid to the long end, we saw a 25 basis point decline in terms of yield. But overall, if you look at the entire yield curve across the various benchmark bonds, we will see that the rate declined by an average of 29 basis points to close at 16.25%. We also re-emphasize the level where yields and rates are respectively still very attractive, because we're coming from somewhere. Where we're coming from and vis-a-vis where we are now, the current position still gives us a good buying opportunity. I would like to encourage clients who are still contemplating on what to do, to know that the rates available in the market are still very, very attractive. Looking at the foreign exchange market very briefly, we saw a significant marginal improvement rather in the official window in Naira. And Naira closed at 1,534 Naira 31 kobo, when compared to 1,535 Naira 25 kobo it closed at the previous week. Also across the various forwards contracts, we saw some marginal improvements in the official currency. But we also continue to emphasize the fact that the volatility in the foreign market has not totally been eroded, has not totally been eradicated rather. And from time to time, we'll still see the volatility in the market. And as developments emanate from this market, we'll always bring our clients up to speed. Then I said something at the beginning that we're looking at how can we give our clients the opportunity to enjoy the dividend of the current market position. So in-house, we've gotten a lot of calls, we've gotten a lot of inquiries from clients, and we've emphasized on the fact that rates are on a downward decline. What can we offer to them? What can we let them do? So we're looking at in-house, we're trying to curate an opportunity whereby people get to invest in our various products, and with emphasis now on our lead result portfolio. We're coming up with a campaign such that investors can get to fill in their funds at a certain rate, which we consider would be attractive when we compare to what is in the market. In coming weeks, we'll roll out this campaign just for investors who have finally made up their mind and probably have come to the realization that rates are not going to go back up. Also, we're looking at what has happened in the equities market in the past couple of weeks. We've seen the market on a bullish run. Some people have made profits. They're looking to take out their profits. They're looking at where can I invest this money. That is what is fueling this campaign we're going to come up with. And hopefully before the end of this week, we'll roll out this campaign For those who have made significant profits in their equities position, or for those who have spare cash and they're looking to invest in the fixed income market, an opportunity is going to be provided to you very soon. And I'm sure that they will be attractive enough for you to put your money in them. But for all of our other products, we have the various mutual funds, our lead fixed income fund, balance fund, our dollar fixed income fund. So these products have been well curated for you to enjoy the dividends in the market, and such that you don't just keep your money lying idle in your regular bank accounts, and you can get to earn significant returns on them. Particularly, we focus on our lead balance fund, which has a year-to-date return of 37.17%. That's roughly about 15% above inflation level. For those who have invested in this fund at the beginning of the year, I'm sure they are better off now when you look at inflation adjusted return. All of these products are there to enjoy the dividends of the market, to make your money work for you. And as many of our clients who are still not who have not positioned or taken advantage of this product, are there for you to key into. And with emphasis once again on the campaign we're going to be rolling out before the end of the week. You've made significant profits in your equities position. You have some funds you're still looking at. Why not put this money to use and then enjoy the current rate levels in the market? And with this, we've come to the end of the presentation, the fixed income presentation. Very quickly, we'll look at the happenings at the equities markets.
Thank you, Samuel, for the review of the fixed income markets. Valued clients, good morning once again. So we'll be following our outline as well. Last week happens to be another bullish week for the equities market, and that will be the 9th consecutive week. The market will continue to close on a bullish momentum. So starting from Monday, for the entire 5 trading days of last week, bull took over the equities market, occasioned by the corporate earnings of the highly capitalized tickers. We saw the likes of West African Portland Cement, Boa Cement, Dangote Cement, and a few other medium capitalized stocks release their earnings, which is the key catalyst to the market. We cannot actually isolate the Nigerian market from the global space. If you also look at the US market, the major barometer being used to also adjust the US market, which is S&P 500, also gained 1.4% week on week, also occasioned by about almost 169 companies out of 500 companies that also form part of the S&P 500. 82% of the results of those 169 companies were also very, very impressive, even surpassed the Wall Street expectation. A similar thing is also playing out in Nigeria. Market will continue to ride on the good corporate results. So last week we saw the entire 5 trading days, market closing on a bullish note. So week on week, we observed that the financial service sector industry still dominated the key activities around the equities market, almost 56%. And we now saw agriculture also coming out stronger because of the more buy interest occasioned by the positive result or earnings being released by the Common Oil PLC. The result was very, very impressive, even met the market expectation. And that will continue to drive the equities market as long as companies are bringing out good results. Investors will be more comfortable in investing in such tickers. And that's exactly what is playing out in our equities markets. People should not emphasize what happened in 2020, 2008, that the market crashed. Most of the activities we have seen, buy interest, were majorly stimulated by the earnings, by the results. And we have also seen stability in key macroeconomic variables. If you see the interest rates, interest rate is still within 27.75%. At least we've seen the first quarter 2025 GDP growth rate about 3.13%. We've also seen the inflation also moderating, and we have also seen stability in the foreign exchange market. These are the things that will be able to guide investors to be able to have a long-term plan. So week on week, market gained 2.81%. We are now seeing ASI moving to a threshold of 135,000 basis points. It gained almost 2,856,000 week on week. It closed 134,452.93. So our year-to-date return has also gone up to 30.693%. When we're now trying to determine our real area of return, I think the equities market investors are more better than those who have also invested in other instruments, because their real area of return now is positive. They'll be having about 7%, which is also very important that we must emphasize. So, of course, we noticed that last week trade volume dropped, but because of the uptick we have seen in the prices of the highly capitalized stocks like under industrial, consumer, and the banking industry, we now realize that even week on week, investors' weight also increased by almost 1.895 trillion, which is also very good. We continue to monitor this market, and then we're going to also dwell more on some of the reasons why investors need to take a critical look about some of the stocks that are also formally capital recommendation. So in terms of high volume trading, Access Bank, United Bank for Africa, and Japan accounted for 20.19% of the total equities volume, and then also contributed 17.33% to total equities value for the entire last week. So we now realize that the NGX market capitalization is now currently at 85.06 trillion. It was also important to note that last week, the key major indices, the 5 key major indices, the banking, the NGX consumer, the industrial, and the oil and gas, they all recorded, they all expanded on a positive note. We saw banking more by interest stimulated by Wema Bank, consumer goods. We also saw NASCON, we saw Nestle Nigerian PLC also moving up. NGX consumer also gained 2.81%. Industrial 4.66%, promoted by mobile interest in Boa Cement and Lafarge. Insurance, we also saw mobile interest around International Energy Insurance and Security Insurance. Why for the oil and gas? It was only Iwando PLC that actually promoted by interest around the oil and gas index, because the company is also planning to raise another 10 billion, 500 billion naira by issuing additional 10 billion shares. I think that was actually stimulated by interest. So, but more importantly, every time we see new results coming to the market, we try as much as possible to showcase that and share that with our value trend. So you will also see reasons why some of those takers we have put in our recommendation are justified. In terms of earnings that we are currently seeing in the market, this is the time we are likely to see the wave or flux of the company's earnings coming into the market, because of most companies will continue to dish out their half-year performance, and then that will also guide more portfolio investors to also rebalance their portfolio. So last week we saw Dangote Cement releasing their half-year performance, which was also very, very impressive. We saw them growing their earnings per share by 3 times from 11.29% to 32.23%. I've also seen our recommendation, and we have also encouraged investors to start taking more position in Dangote Cement, because we have seen that their first quarter results is not bad, and second quarter results will also be more better than the first quarter result, because of stability we have seen in some of these key macroeconomic indicators. So last week we saw Dangote Cement growing their earnings per share from 11 naira to 13 naira, which was what is actually declared for 2024 financial. So we should expect that the 2024 Dangote Cement is likely to grow their earnings above what they did last year. With half year, they are doing 13 naira. So the same thing, Boa Cement from almost 1 naira 8 kobo to 5 naira 14 kobo. So they have also been able to grow their own earnings per share by almost 4 times. It's an indication that this week that company is likely to witness more buy interest, because that's what stimulates investors' appetites, that when companies begin to reach out good results. But the same thing, Lafarge was having important cement. We've also seen that their earnings per share have also been able to improve their earnings per share from 1 naira 82 kobo last year half-year performance to 8 naira 24 kobo in 2025. And if you look at the performance of this Lafarge, they did 1 naira 20 kobo for the final year. They also declared 4 naira as an interim. So similarity is also likely to play out. So by the time you start looking at this market recommendation on a weekly basis, you are seeing some of these stickers. These are the hard parts that will convince you that this is the time for me to buy. If you are having some position in those companies, in those stickers, it's also very good. But if you have not been able to invest in those companies, these are the reasons why you also need to ensure that you allow these companies to also form part of your portfolio, because they are blue chip companies. And then as we are moving towards the year end, we are likely to see more better result coming out from this company, because some of the variables that are really affecting companies why their results have been very, very not meeting market expectations, they are now gradually easing out within the market because of the stability we have seen in the key macroeconomic indicators, and we are likely to see more coming in the subsequent month from all we have seen. And even what is likely to pose a threat to the Nigerian economy from the global perspective, we are seeing some level of a discussion and agreement between the US and the major economies of the world. So in terms of stability, geopolitical tension, we are likely to see more stability, and there's no way such will not reflect in Nigerian equities market. So Nigerian equities holder, try as much as possible to ensure that you use this capital recommendation to accommodate takers that are posting very good results, so that at the end of the day, you can be properly and best compensated, because what the company will do in annual year financials, when they are looking at a financial year for 2025, can be extracted or can be also be looking from the perspective of what they are doing in the first quarter, second quarter, third quarter. So half-year results give strong signal as to what is going to be the expectation in terms of return by the time this company are rounding up their financial year for 2025. We have also seen Okomu results also coming out very stronger, and then the company is also coming out again this time around. They are also declaring interim dividend of 11 naira. They have been doing that over the years, and we could see that last year they did 8 naira, and because of the improvement they have seen in their earnings for the half year, they have been able to top it up by 3 naira, which is 11 naira. Though the price has gone up, when companies begin to post good results, you are likely to see market rewarding and repricing such takers. And that's exactly what is happening to Okomu. So for investors that want to take advantage of Okomu, if you don't have it in your portfolio, you can take advantage of that now, because the price is still likely to go above what is currently trading, because you see more investors coming to ensure that they also take more position. So Okomu Oil is a good buy. And then BUA Foods, the dividend qualification window is still open for those who also want to be part of the investors in the BUA Foods. It's closing 21st of August. So if you haven't bought and you want to benefit from the dividends of 15 naira, I think the window is still open. So we are still in the month of July. So in terms of our capital recommendations for the week, we have over 162 companies listed in our market. And of course, we cannot cover the entire companies, because we need to do a thorough analysis. And if you look at the capital recommendation, what we have been able to do as represented like almost 34-35%, we cover like almost 59 stocks, which cover the major indices within the market. So looking at our recommendations for the week, that has been sent out this morning, but we have also extracted almost 37 for the benefit of those who have opportunity to also attend this this morning program. So 1 to 27, we are placing them on buy recommendation. We now have Access Bank. We are still maintaining our position on buy. And Eco Bank is buy. Fidelity Bank is buy. GTB, UBA, United Capital, Zenith Bank, ICO, Custodian, Master Insurance, Better Glass, Cooties, Transcorp Power, Power Cement, Dangote Cement, WAPO, Ines, Sunnyflower, Unilever. So if you look at all these companies, 1 to 27, they are buying. If you haven't received our weekly recommendation, please reach out to us. And we're also going to share this slide after this program, while we are also placing a few companies under hold, the likes of Cadbury, NASCON, NACO, Stanbic IBTC, and Wema. We are also awaiting to see the half-year performance of some of these companies, because we've seen elevated price in the last 2 3 weeks. Let's also see what is also happening, so that to be sure whether they are not in the overbought region. Point 33 to 37, we're also placing them on sale. The likes of African Prudential, Fitson, Lasako, Sterling Bank, and then Transcorp. We also see other companies are also recommending for sale in our recommendation. So in terms of our weekly expectation, last week we saw little marginal gain in oil and gas due to the bad interest in O&D. And we have also seen some second quarter, half-year performance also trickling into the market. Like I said earlier, Lafarge, Dangote Cement, and Airtel Africa and Okomo, they are one of the blue chip companies that have also released good results. And we're likely to see more bad interest in some of these highly capitalized stocks. And that's also likely to drive this market beyond 134,000 per share index basis points. We also believe that the bad interest is also going to outweigh the fair interest. because of the investors' confidence. We've seen improvement in macroeconomic indicators. It will going to drive investors to also take more position, and then the yield in the fixed income market is also coming down. We are likely to see more funds also going to the equities market. So we do not rule out possibility of profits making. That is part of the market. You see investors taking profits in the market on a weekly basis. So, but our belief is that week on week, the buy interest is going to outweigh the sell interest, and then it's likely to make the equities market ESI close on a positive note week on week. So, in terms of analysis, we believe strongly that the market is also going to close on a positive note. Bull may not dominate all the trading days within the market within the week, however, at the close of the market this week, we are likely to see equities market also closing on a positive note, and ESI also trending towards 135,000 basis points. So with this, I think we have come to the Q&A section of this program. So the floor is open. I know this.
Good morning. The market has been going up for almost 2 months, with prices reaching their 2 weeks high. Is that sustainable?
Yes, it's sustainable because I said in the presentation, one of the things that drive the market is results. The more market witness good results, the more you see sustainability. If you also need to look at the key indicators that also serve as catalysts to the market, we are also seeing that there's moderation in the fixed income space, and then market is likely to witness more buy interest. And then the stability in the foreign exchange market is also very important because it has also given reposed more confidence to the market. Both local institutional investors and even foreign investors, they can now plan with the stable exchange rate. So there's no way something will not promote the market. Of course, sometimes market will get to be overbought region. But the good thing is that the bullish trend is seeking to continue, and the market will sustain that as long as the market is witnessing a good corporate results eating the markets. So that is sustainable. Of course, we can't have bullish trend for the entire year, but sometimes the market will be down, it will be up. But the good thing is that the bullish trend is sustainable. So there's no cause for alarm. Investors should ensure that they invest in fundamentally sound stocks that form part of the capital recommendation. Africa seems to grow their revenue. What is your Okay, somebody is asking, what is the projection for the interest rate, GDP growth rate, and exchange rate and stock market? For the interest rates, where MPR is the key variables, we also need to consider. We believe that before the end of the year, MPC committee, if they are going to adjust the interest rate, we are looking at between 50 and 100 basis points. By the time you subtract that from 27.57% we are thinking exchange rate of around 26 and 26.5%. So that is going to happen, and that will also improve earnings of the company. For the GDP growth rate, we've seen the base GDP growth rate into the market about 3.13%. If we see what we closed last year, I think we closed over 3%. So year on year, we're also expecting GDP growth rate of around 3.5 and 4% because we are now seeing key variables driving the economy, and that is going to reflect more in our GDP growth rate. For the exchange rate, it's still stable. We are looking at around 1,500 and 1,500 to 1,550. Okay, based on the half-year results, somebody is asking about Dangote and which is the best. It depends. The two are okay, but the Bua Cement has what they call it. They have been able, in terms of growth in the earnings per share. The earnings per share was higher than that of Dangote Cement. So Bua Cement has potential to pay better dividends than Dangote Cement. But the two stocks are good to buy. Alade Holding is also good to buy. So thank you. I think with this, we have come to the end of this morning program. So we want to thank all our valued clients for taking out their time to also join this program this morning. We appreciate you once again for taking your time to be part of this program and to be an attendee of this program this morning. We wish you a successful week ahead. So we will also ensure that you get the slide before the close of the business, while our Leaf Capital stock recommendation has been sent to your email for you to take action. So thank you. Good morning once.